Can the LIC Jeevan Akshay VII plan be a helping hand during your post-retirement period? Will it provide financial security in your post-retirement life? Let us find out through an in-depth analysis in this video. Hi. Welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand what is this policy is about. So, this is a non-linked, non-participating, individual immediate annuity plan. And some of the key features of the policy are: you only need to make a one-time premium payment, and you have the option to include your spouse under joint life cover. There are 10 annuity options to choose from, and your annuity mode can be chosen as per your requirement. You also get a guaranteed annuity at the chosen interval. So as I have said, there are 10 annuity options and the benefits differ based on the annuity option you have opted for. So if you want to know more about the benefits in detail, you can refer to the policy brochure. Now let's take a look at the advantages of investing in this policy. So this is a hassle-free investment option, and your annuity acts as a regular source of income. So your death benefit is your return of purchase price, which can be received as a lump sum or an installment. A joint life option is available, and a loan option can also be availed. So these are the advantages. Disadvantages are: the annuity option once chosen cannot be altered in this policy. The annuity amount is not adjusted for inflation, so you receive a standard annuity every year except option G. And the surrender of this policy shall not be allowed for options other than option F and option J. The loan facility is available only under option F and option J. So once you purchase this plan, you can't utilize the capital for any other purpose. And the annuity is also fully taxable. So you need to keep in mind these drawbacks before deciding to invest in this policy. Now, as we have a basic understanding, let us now work out the IRR of this policy based on the benefit illustration given in the policy brochure. So let us assume a 45-year-old male buys this plan for 10 lakhs, which is the purchase price. So he chooses an annual annuity. Since most of the plan provides a lifelong annuity, we have assumed a life expectancy of 85 years. So in the case of joint life, we assume that the life expectancy of the last survivor is also 85 years. And you can see that various options, like all the option A to 10, like all the 10 options have been presented on the tabular column with the annuity amount and its IRR, which is the internal rate of return under each scenario, just to give you an idea of how it will work out based on the other options. So option A out of these provides the highest annuity amount. You get the maximum benefit under option G because you get an annual step-up income. The least IRR is for the option F and option J, as they just return the purchase price at the end. So if you look at the IRR, it's almost hovering around 6.5%. One might think that an annuity in the range of 6.5% is a good option. But if you consider inflation, then the annuity wouldn't be helpful in the long run. Moreover, you lose the opportunity to invest in other investment options, as you don't have the surrender option except in options F and option J. In the rising interest rate scenario, your funds get logged in LIC Jeevan Akshay VII plan. So as we discussed, this plan looks like a mirage. It may look beneficial, but it has no value for money. Now let us look at other investment options where you get regular income. So the following instruments are also lump sum investment options. So we are going to compare the LIC plan with other fixed income options in the market. Like in the following options presented on the screen, you have the advantage of spreading out the investment under various investments, like diversification. So we can avoid the concentration of funds in one place. So bank FDs typically give you a interest rate of 6.5 to 7.5%. SCSs give you typically an interest rate of 8.2%, and RBI floating rate bond currently gives you an interest rate of 8.05%. So the tenure for FD is 3 to 5 years. For SCSs, it's 5 years. RBI floating bond, it's 7 years. The frequency of payout is monthly, quarterly, half yearly, annual in the case of FD. In the case of SCSS, it is quarterly. In the case of RBI floating bond, it's half yearly. And the maximum investment limit for FD is no limit, but for SCSS, it is like 30 lakhs limit there is, but there is no limit for RBI floating rate bond. And there are taxation, premature withdrawal. You can see all these factors mentioned on the screen here. As you can see, the point to be noted here is the above option, like the options presented here provide a standard regular cash flow without taking into the account economic inflation. So only under the RBI floating rate bond option does your interest change as when there is a change in the market. So in order to get inflation adjusted regular cash flow, it is always wise to invest in mutual funds. So here what we are going to do is we are going to invest a portion of our funds to be invested in equity, which grows and replenishes the debt part here over the long term. So under this strategy, your corpus might outlive you. How to do this is assume a 60:40 ratio for equity and debt respectively. So out of 10 lakhs, 6 lakhs is invested in equity for wealth accumulation and 4 lakhs is invested in debt for regular income needs. Equity returns are assumed to be 12% per annum and debt returns are assumed to be 6% per annum. So here in this strategy, the first year annuity amount is assumed to be similar to the option F option, which is the immediate annuity for life with the return of purchase price, that is 64,800 rupees. So every 5 years the debt portion is replenished from equity, and every 5 years your annual withdrawal increases by 6% to combat inflation. At the age of 71, the equity portion is fully shifted to debt. Even after this shift, this corpus might outlive you, leaving you with approximately 16 lakhs at the age of 85, which is higher than the returns of the LIC policy. So the 60:40 ratio and the shift to debt at the age of 71 are just for example purpose, and this can be adjusted and customized based on your financial needs. So asset allocation and the shifting of funds between asset classes can be tailored to your risk appetite. So this investment strategy demonstrates the efficient use of your hard-earned retirement corpus. So now, what is the final verdict on our takeaway or like on our analysis of this policy? Is the LIC Jeevan Akshay 7 plan worth investing or not? This plan does offer different pension plans that you can choose based on your needs. So options may include a lifetime pension, joint life pension, and pension with a return of purchase price. You just need to make a one-time lump sum payment to purchase this plan. This payment is non-refundable except under the option F and option J, as the plan primarily focuses on providing a regular income stream. The plan provides a fixed source of income during your retirement years, but you can't rely solely on this income to meet your post-retirement expenses. There are better investment options that yield you better returns than this policy. Also, you have the flexibility which is missing in your investment in the alternative strategy that we saw, which is missing in this policy, because here your funds get locked and you cannot utilize the capital for any other emergencies. So from a return perspective as well, this policy is not beneficial. So if you are someone who wants to lead a stress-free retirement life, you should prudently invest your retirement corpus. Any ready-made annuity plan will not provide you a one-time solution for your retirement income, because each individual's retirement needs will be unique.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.